Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And I have a confession. So even though this video says not clickbait, it's totally a clickbait thumbnail. But we're just going to go over velocity banking, my results. And here's the thing. I never tell any of you that this is like the best thing for you since sliced bread. I just say this is what the concept is. This is what I've done. If you want to do it, cool, and if it's not for you, that's awesome too. Like I don't really care that much because once upon a time, I actually used to care about other people's opinions, so I would share things like velocity banking with other people, and then they would say, "Oh my gosh, like why would that work?" Right? And because I paid 2,000 and something for an educational program that taught it to me, I felt like a giant idiot and I thought I got scammed, right? But there's a phrase that says, people who don't pay attention. And because I paid, I was going to figure out everything about Velocity Bank to figure out whether it's going to work for me or not. And then I'm going to apply it. And then after applying it, if it doesn't work, then I'll make YouTube videos about, hey, how it didn't work for me. Right. So let me just kind of go over this document that I created about just my experiences with people in general. So when you do something a little bit different from the norm, people tend to complain, and you'll find that people will complain about things that you wouldn't have ever imagined. Whether it's just putting money into a credit line and just paying bills off of that, or trying to eat healthier, right? I remember like I had my mind blown when people would complain about me trying to eat healthy, and they still do. And I act like, oh wow, you're really right, and then I just kind of do what I keep doing, just so that I don't get with to argue to anyone, because it's not about whether someone agrees with me or not. It's just I'm going to take the actions to take care of myself, and if no one else is going to do it, I'm perfectly okay with that. So let's just kind of take a list of things that people don't tend to complain about because it's normal, that maybe that they should start complaining about. So number one, paying 50 to 200% total interest on a 30-year mortgage. So I have many videos about this, but if you've never seen any of those videos, I'm just going to give you a quick summary, quick class about how mortgage interest works on a 30-year mortgage. If you ever get quoted 3% APR on a 30-year mortgage, that's actually a 50% interest loan, basically. So after a 30-year mortgage, you're going to, on a 3% APR interest rate, you pay for 30 years, you've essentially paid about 50% interest. And if you pay like a little bit, like above that, like 5.4%, that's actually 100% total interest loan. And 9.4 is about 200% total interest, right? And I find it funny that nobody ever really complains about this, right? And the reason why nobody ever complains is that A, they don't even most people don't even realize they're paying that much, right? That's reason number one. Number two, it's because it's the norm, right? So if they actually read the paperwork and just, you know, didn't understand what they were reading, people don't complain because it's totally the norm, right? Number two that they don't complain about, which they should, is fast food, right? I remember like there was once upon a time in the world where people got scared because of health reasons, blah, 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 blah. Yet these same people who got really scared about their health, for some reason, line up in like fast food driveways. And I would always like see like 12 cars in the driveway. It would blow my mind how they were scared about one thing because the media told them to be scared, but they were not scared about the other thing that has ruined people's health and lives for a long time. But why don't people complain? Because it's normal, right? And I've had so many people complain about me, let's say, eating healthier and trying to juice fruits and vegetables and all that, and act like it's like the end of the world when I've been doing it for the majority, a good number of years of my adult life, right? But people will complain, and people who don't know me, they see that, they're going to complain and act like it's the end of the world, and I'll disagree with them just so that I don't have to get into arguments with them. And I'll just keep doing what I'm doing. You see what I'm saying? The last thing that I think is just the reason probably why our youth have been ruined, one of the reasons, is just amass the student loan debt and learning little in college and graduating with little no job prospects that people don't really seem to complain about. Like we push the mass majority of young people into institutions that do not serve them. In fact, there are surveys and studies that have said that maybe at least like 40 to 50% of Gen Z are severely depressed. So I wonder why people don't complain about that. And the reason why people don't complain is that because it's normal. And you do anything a little bit different, let's say offer educational programs that are not the standard and have no certificate or degree that will charge money, people will complain about that. And I get it. And why? Because it's a little bit different from the norm, right? Even in the age of the internet. So I get it, right? But people really should start complaining about these things and call it a scam. And I don't understand why they don't, right? People will call velocity banking, oh my goodness, like credit, paying bills off of your credit line is a total scam. Like, okay, yeah, sure, I guess it is. But here's the thing. I could show you all my results of what I've been doing. And even though when I do spreadsheets, I'm kind of like winging it and I make mistakes once in a while, and I even tell you that my math is inaccurate, I actually keep track of my figures, right? So I have all this data right here of, the statement date starting from this year, the balances, the interest payments, what's the minimum payment amount, cash flow index, if you don't know what that is. But I keep track of pretty much all of it, okay? And so here we have it up to September, right? And so right now it's September 22nd. And so the 25th and the 28th haven't passed yet, but this is like the estimated balance that I'm probably going to get on those days. And so here I have this report that allows me to see how much the statement balance has been, and then the paid off debt. So in January 2023, I actually had $112,000 in credit card debt, believe it or not, like a credit card, line of credit debt. And then as you can see, applying velocity banking, it's going down, down. Now I had a couple of negative cash flow kind of months. Here I had to refinance, so I had to pull out money from the line of credit and then put it back in. And then now you can kind of see it's kind of going down. So I probably could have done it faster if I didn't have to refinance a loan. But unfortunately, when you have a short-term loan, you do have to refinance, and the lender wants to see money in a checking account, even if it comes from a line of credit for some reason. And I even tell, I'm always honest with my intentions and say, hey, I have lines of credit. Will that work? They'll say, sure, but you got to pull it out. I'm like, ugh, whatever. All right. But as you can see here, we start out $112,000 of debt of a line of credit line debt here. And then September 23, you can kind of see that we paid off about $52,000 of debt in about 9 months, which I would say is pretty good. You know what I'm saying? Like, I don't think most people can do that, even with on top of other debts like 2 mortgages. You know what I'm saying? Because I got 2 mortgages. And so here we see the amount of interest that's been being paid. So again, it was kind of, some of these were zero cards, and the zero interest cards are expiring, and then they're kind of going back up, and then now they're going down again because every debt that we paid off leads to more cash flow and leads to less interest, et cetera, et cetera. And here's the amazing thing: even though I borrowed $112,000, I only paid 5,200 in 9 months. So I think that's pretty good, right? Mind blowing from these credit card debts. So again, velocity banking may not work for you. And I know there's a lot of Dave-ish people there. If you don't know what I mean, it's like people who kind of follow the program and then they complain about not following the entire program. And I would, again, if you're not, I would never say you should do this, but I'm just gonna say, like, these are my results. And if you think like this is like a scam, okay, then I guess it is, but I'm not gonna argue with you. I'll just say, cool, you're totally right. And then I'm gonna keep doing what I'm doing. Now, for some of you, maybe this is no big deal. You paid off, hundreds to thousands of dollars in debt in like 3 to 4 months or something. I think I've seen those stories in like the Dave Ramsey show. Like, dang, these guys have gotten beat, and they didn't even use velocity banking. You know what I'm saying? So anything can work, anything and everything can work. And I just use velocity banking. And as you can see, I paid off about $52,000 of debt in about 9 months, and only to pay $5,000 of interest. And the beauty of it is that I was able to sleep at night because for me, using the HELOC or the lines of credit gave me a lot more flexibility and control over my own money and what I did with it, right? So let me just kind of show you here what else I was able to do with the HELOC or velocity banking strategy. I was able to pay off 1/4 of my primary residence mortgage in about a year, right? So if you take a look here, it says the maturity is 2051. And so 2051 is when the last date of the mortgage, 30-year mortgages, and if you subtract 30 years, you can kind of see that this was 1 year after the first year of the mortgage. And so third minus 30 years is 2021, 1 year has passed, and you could see the principal balance here and the loan amount. And let's just kind of quickly calculate it. So that will be 238,496 minus 179,681.65. So that's about $58,000 in about a year. Divide by 238,496, and that's again 24.6 round up. That's about 1/4 of the mortgage. Now I don't know about you, but I don't know anyone who has done that in real life. Now some of you I've talked to in real life actually make more money than me and understand the concept, and they're still can't they can't do velocity banking, or maybe have a little bit of roadblocks and issues of doing it. But I'm just showing you my example. I'm not saying you got to do it. I'm not saying this is the best strategy. I'm not saying it's even better than extra payments. I'm saying this is what I've done. This is what the strategy is. This is how I applied it. And I've applied it in several different situations, where it's having multiple lines of credit, doing it on a mortgage, right? So I could pay off 1/4 of a mortgage, and I got 2 mortgages, right? So it allows me a lot more flexibility in how I handle my money while still being able to pay off the debt quicker. Now, if you think it's an overcomplicated system, you're probably totally right. So just don't do it. Whereas for me, it's very simple and easy. So I just set it and forget it, and then just make sure that I pay off put my paycheck in one place and use that as an operating account. One other thing that I kind of want to always mention is that I'm going to tell you what I've seen as the norm. So when I first learned about how mortgages work, um, I was very surprised about the finding out how much interest a bank makes in a 30-year loan, right? So, like, as I said before, the 3% mortgage, banks make about 50% total interest on a 30-year loan. Um, you know, 6% is a little bit more, is about 115% total interest. And so I was so blown away. And then I heard somewhere like, yeah, most people don't pay off their 30-year loans in 30 years. And so what I was doing is I was going on an internet search spree with some software subscription services that have access to mortgage loan data. And I found this to be the case over and over again, where with people that I knew. So it's like they bought a home. So let's say they bought a home for $280,000, and then 30 years later, they owe out the same amount. And that's probably going to be true for the vast majority of the people that you may know. Again, you may be the exception where, like, you paid off the loan in 5 to 7 years, and there's various ways to do it. Velocity banking is not the only way to do it, right? But what I would say is, why not complain about this situation that people get themselves into, where they pay for a home for a certain amount, and then 30 years later, they either owe almost the same amount or even more, right? And so in this situation, their wealth was just a giant illusion, because when they pass away, what happens is that their kids or whatever are forced to sell their assets, and then there's no intergenerational wealth. Now, you could say, like, for the people who passed away, that's not their problem, but come on, like, we kind of have to think about the next generation, right? Or what's the point of forcing our kids to go to school and go to college? If we're gonna suck at what we do, might as well not even try, right? But yeah, so why don't people complain about this situation? It's because it's normal, and when you do something a little bit different from the norm, people will complain, right? And we should probably add to the list, well, not only to 50 to 200% total interest, they never pay off a 30-year mortgage in 30 years. That's like 90 something percent of people. And I hope I didn't make up that statistic, because I've heard it many, many times. But again, just from anecdotal evidence, right? Anecdotal evidence, um, you know, this is like the norm. I mean, I challenge you, whoever you are, to go sign up for a software subscription service, or find someone else find someone with the realtor's license, and look up all the people who own homes, see when they bought it, and see how much they owe, because this is public information or data. You can't find, you might be not be able to find with a simple Google search, but that information is out there for the public to see if you dig hard enough. Okay, so has velocity banking been exposed in this? Is this a clickbait video? I don't know. I don't think I just went off on a tangent. But as I always do, I'm going to make a plug for the video. I'm sorry, plug for a group. We had our first member join this week. Shout outs to you, Ann McBee. And we had our first strategy session too. So if you're interested in joining our group, go ahead and click the Google form link below, and we'll get on Zoom call to share information and get to know you. And also, you can email us by going to the About page of the YouTube channel. And one other thing, too, is if you've never heard of Velocity Banking, go ahead and click the link to Velocity Banking 101. If you made it to this end of this video and you're like, what is going on here? What's Velocity Banking? Go ahead and click the link to the Velocity Banking 101 video below, and then come watch this video again. Okay, all right. Have a great day, everybody, and we'll speak next time.